All right, good day, friends. So I want to do a market narrative for July 6th. A friend of mine asked that I should do a narrative on gold July 6th. But I can't we can't get a lot of perspective on that day except to look at what the market has been doing for the past few days or 1 week behind. And it's said 15 minutes. So from there you would have already know that okay, what happened last week, what happened the previous week, and what are we supposed to look at for the next week. And that's why this is the 2nd of July. This side is the 2nd of July to the 6th of July. So I have everything marked out already. And let's go to 4 hours first. Let's go to 4 hours first. So at 4 hours, this is it. This is what happened. The market got to demand zone, a demand zone at this exchange side, then went upward. But at this current side of the market is that gold has been bearish for some months, some weeks, for some days, and now all of a sudden we saw a push from this side, and we tested this side, then went and break this lower high, broke this lower high, and went up to come and mitigate this. So I was expecting a mitigation. I was expecting a mitigation at this side. I was expecting a mitigation at this level. At this level here, I was expecting a mitigation at this level here. And market came here. This was around July 3rd. That's around the 3rd of July, and we move forward to the 30 minutes, so we can see the perspective of the market from there. So 30 minutes, we saw that the market at this side went up and is created this angle side, and it is left unmitigated. This side broke. Okay, let me just use this is what happened. This structure was broke downward, and this is the next point of interest that we mark from our 4 hours. Is the next point of interest that we mark for our 4 hours. From there, we expected the market to come, then it rallied up into that zone. But let's look at the zone critically, which was the day my friend asked July 6th. The market started in here July 4, then went down, then came. Then what happened was that this place was swept. The liquidity here, even though it has tapped the zone, the market swept the liquidity. So this side there's liquidity at that upside. When I say liquidity, it means money. Where there's money in the market. So from there, the market went down to tell us that okay, I'm ready to sell, I'm ready to go down, I'm ready to break lows now. I'm ready to break lows, and this is our change of character. And since that's our change of character, we're going to look at what the market, our point of interest next, which was this place. This is our major point of interest for the 30 minutes. For the 30 minutes. But when we look at the 1 hour candle, because when we look at the 1 hour candle, it was that this place was efficient. This place was efficient from 1 hour because you can see that we have been bringing the direction of the market right from daily candle to daily candle to the 4 hour candle. Then now this is the 1 hour. So the market tapped into this zone efficiently. Taking away this inducement, you must know that inducement is a trap place where the market wants to prove to traders that they are about to sell, but they are not ready to sell. But now what happened is that the inducement was taken away after the change of character. Then it tapped into the zone that we pick from our 1 hour. So now let's continue directly. So it went up, so it went up to create this side, then broke another structure downward. Then you're like, oh wow, I'm ready to sell the more. I want to sell more. I want to sell. I want to sell more. Then it broke the structure. After breaking the structure here, the market rallied down, broke another structure here, broke another structure here. After breaking the structure here, it went up. This is our inducement. Why is this inducement? This is inducement, which I talked about. This is inducement. But the market went up, right it up, and came to mitigate this order block. And when it mitigated this order block, same thing happened again at the lower time frame. If you see, this is the last change of character that happened here, the last pullback that happened that made us to have a change of character. So after change of character, what did I say again? Notice your inducement. This is just repetition, rinse and repeat, rinse and repeat. What happened here was inducement, and this is our structure that we want to enter. That we want to enter. So after entering this, you take your entry, you take the entry here. So we've seen a lot of entries already. We've seen a lot of entries. This is one entry. This is one entry from this list. 1:6. This is another entry I would like you to see. This is another entry, the full entry at this place. So the low that was created down here. There was another entry that we got from this side, from this angle side. So when you know the trend, when you know the trend of the market, when you know the trend of the market, you know the direction of the market, you just have to follow what the market shows, not what you assume of the market. So this is what July 6th play out looks like. So share to your friends, share to your people. Shalom.